So if you want to pull up the risk disclaimer real quick, Travis, we'll get it going here. So just remember, folks, trading futures contains risk. Only risk capital should be used, whether you're trading futures, crypto, options, whatever. Please, risk capital only, and build a track record before you do it with live money. So we're here to not only help folks get into trades, but also help them preserve capital. Knowing when not to trade is the most important aspect of trading, in my opinion. We'll find our spots to trade. Don't worry about that. But knowing when not to trade is really important. So our goal here at FNL for the OB session is to develop a plan for the day. We're not trying to predict which way we think the price is going to go. To be honest, we don't know which way the price is going to go. But what we can do is have a plan if the price goes up. We can have a plan if the price goes down, and we can have a plan if the price chops. So that's what we'll be doing this morning, is drawing some levels here and looking at where the price, if it goes in a certain direction, we can have a plan. So with that being said, Travis, let's get it going, dude.
Awesome. Let's get it going.
Yep.
So first thing, see our 5 minute. We'll talk about it again later, but the first thing that stood out this morning on the 5 minute was looking back at the level we drew yesterday morning, bodies to wicks. We harp on those levels a lot, and I noticed that we tested it once yesterday, couldn't close under it. So even though we wicked under that level, we were never able to close under that level. Mm-hmm. And then this morning we had a triple tap right there. So that was 39.12 to 39.13.75. If you wanted to mark that on your own charts, probably a good idea, because if we hit that later, that becomes not necessarily a place that I have to go long. I look back and I see that the market is pushing up every time it hits that level. But I also know in the back of my mind, if we do hit that level, we'll probably be in a downtrend. So what does that make this level? It makes this level headroom in any short trade I take until otherwise. Now, some people might use the bottom of a wick or something as headroom. I really like seeing, wow, this level was created, and 5 or 6 different times it's been hit since. So if I'm in a short trade, I want to fill above it, maybe a couple points above that area, or at the bare minimum, I want to scale out. Even if I think this market's going to run to the negative moon down there and just go forever, I'm probably thinking of ways to scale out with a reasonable gain and then scale out again when I hit that level. And then if I have contracts left over, I can chase the runner. If I don't have anything left, then I'll just take the extension of the trade that I get from the stop presented to me at some point in time, right? And that's just an overall concept, not necessarily has to happen right now, but just thinking that if I want to extend a trade, a lot of times people think, well, I'm going to turn my 4-3 into a 40-3, and that's it. And the problem there is that it's very difficult to choose spots on the market from which you can trade with a 3-point stop and expect 40-point gains. At least not consistently. Right, so that's where the scale out comes in, and maybe you have 3 or 4 contracts, and by the time you get to 30 or 40, you've already scaled out of 3 of them, you have 1 left. So maybe a quarter of your trade gets that big move. But overall, I think too many people get caught up in, wow, look how many points they made on that contract, and I need to do that with my trading, and they start extending all of their gains so far that they naturally reduce the chances of their trade failing, reduce the percentage of win rate, if you will, in their trading by trying to extend your gain too much. So there is a balance there. Some trades are worth being extended, but that's something that, again, like Rob says, prove to yourself over time in a repeatable manner that you're not thinking during the live market. That's our goal as traders, right? To set up everything in my head, my rules, my trade, my strategies, so that when the live market shows up, I've already made my decision. I just have to click the button. As opposed to sitting there, oh, it's turning, oh, when do I get in, what do I do? And there's a lot of uneasiness. If you've never been there as a trader, you will. Especially if you haven't gone live yet, you will feel like your whole zone is just a big question mark once you go back live. It's like, is this one worth it? And
another thing too, Travis, on that bottom, for me, that's probably going to be my chop zone.
I agree.
Because the price has come down to there how many times and gone back up. So am I really that confident in getting in a trade yet? But let's say that the price does get below that and then retest it. Now, how confident am I in going short? Pretty confident, because now we've broken through that pretty strong level of support over the last 2 days. So, I can look at that and say, if I was going to go short, up here would be a great spot to go short because of, I've got a lot of room below me. But if the trend's in question, do I really want to go short right now? But if it breaks that level, if it gets below that level, comes back and retests that level, now that might be the spot to go short. So now I have a lot more confidence because we'll be below the EMAs. The price has gotten below a level of support. Now I'm pretty confident that we could be headed down for a little ways. And we'll see how far we can go on other charts, But so for me, that level too is a big level that if we get below that, I'll be really confident in getting into a short.
Awesome. I agree 100%. We actually spoke about that this morning before you came on, that's the trade I want to see. I said, if there's a perfect storm for a trade this morning, I want to see us make a new low, come back, and again, like Rob says, retest. So show me a turnaround at that level. I can't just assume it has to happen. The retest implies that it's testing a level and has to show me that it's doing what I want there. And I think that's where egos get in the way of a lot of people. They can identify their trend and position, but they don't wait on the market to agree with what they want to happen.
All right, let's go to the daily.
Let's do it. So again, 5-minute creeping down over the morning. We were above the EMAs yesterday. Since then, gap down and on the way down with the deep retracement, kind of in the middle of a lot of stuff right now.
Yep.
Daily. So now we can see, well, really since, what is that? The end of March, beginning of April, we're pretty down.
Mm-hmm.
Pretty down. There's a lot of different levels down here. I can move my fib levels, make it look a little cleaner here. But you can see that's from the last move down, so we'll probably talk about that in a minute.
Yeah, we could even look at all the way back to the beginning of the year. Really, everything's been down since January, but since April, it's been a steady decline. So.
And after yesterday, if I'm looking at the daily, we have lower low, lower high, lower low. We came back and we showed green up, red down off of the 10 EMA. So today's a good day that we're going to see tested in my mind. So what this to me means is that we have a shallow retracement that is pushing off the 10 and trying to push down, but we're right back at this support zone. So that gives me a big squeeze area to say if we can get under it, well, now we've just shot off the 10, which is a lot of times what happens after the market or before the market starts to run. And then if we can't hold it, obviously there's our support zone and we'll see if we can start making our way back up. But there's no guarantee that we'd even crash back up as much as just kind of see this battle right now. So
when you see the bottom there too, the bottom of the green candle next to you, remember that level that we just drew on the 5-minute chart?
Yeah,
that's it. It's right there, folks. That green, the bottom of that green candle right there, that's what we're looking to get below to confirm that we're headed down.
Mm-hmm.
That's the bottom from yesterday, right? Isn't it? Yep, that's it. So again, what we're trying to do is match up our charts to say, okay, and we started with our 5 just because that's one we look at the most. But now we're going to look at the dailies, and then we'll go through the time frames and say, okay, if price drops below a certain level, then wow, we could be in for a really short day. If the price gets above a certain level, and right now we might want to look at, well, current price action. If we can reclaim this red candle that we have right here and get above that, then we have what to the top of the green candle to trade. And then above the top of the green candle, we've got another level above here to trade. So now we can start building our levels on our way up, and we can look to our left, and you can see here how this is such a strong level here. This is probably a really strong level. What is it at? Right about 4,000.
Yeah, so it's at 39.90. Go ahead.
Yep. 39.90 exactly. So we can start looking at that level on the top as if we can get by this green candle next to us, right? Now we got another, however far, another 100 points or so to get up to 4,000 or so.
So yeah, I mean, our chop zone, the wider one, is still very similar to the day before, where 4,000 on the top side and 3,900 on the bottom side is just under that other key level. And it's 100 points, but it's where we've hit support from a longer term. We're trying to push back up, and now we've hit resistance on the top side. So it really does, even though it seems like a wide range, there's a good chance there is 100 points of chop, at least until we decide which way we really want to go. Now, I will rely on the 5-minute or a smaller chart to show me a shorter term trend. But as far as the larger charts are concerned, we have a shallow retracement that's trying to push back through, but it's already made it almost to the bottom of the move, right? So it's already hit a point that if it's going to go back up, it might be going back up now. And that's again based off of seeing how it was a support level again, and then yesterday pushed down close to it, not quite there, but now we're rebounding and on the way up after showing a turnaround on the bottom side of the market. So it doesn't necessarily mean it has to go up, but we're definitely seeing a little bit of pause in the down or possible retracement, if you will. So
Can
I'll
anybody
throw a
tell?
quick interjection in there.
Yeah, Terry.
yeah, what's up, Terry?
Do you think there's anything to the idea that, like you say, there's market makers and the big institutions and all of that? Do you think there's any validity to the idea that they want to avoid a bear market because it affects them as much as it does anybody else? So they're like you say, that opening range, bam, they shoot it up because they want to avoid the idea of a bear market and everybody's selling short.
I honestly, I don't know.
Yeah, I'm not qualified to make those types of decisions yet.
Yeah,
if I get there one day, I'll let you know.
There's those days when all the indicators showed the market's going down, and all of a sudden it goes up 100 points. You go, what in the world is going on?
Well, part of that, Terry, I mean, part of that could be big guys, but let's think about what happens. Let's say I'm at this box right here, and everybody says the market's going to go down from there. It is the clearest thing I've ever seen, right? Well, the problem with that is if, let's say the sell orders are pink, if I'm selling into a trade, everybody's selling and everybody's going short right here. Yet most obvious level ever. Well, the cool part about that is that the market is binary. You're either selling or buying a piece of it. So all of these people trying to hammer down the market, you know what they have? They have a gain somewhere down here, which is a buy order. So somewhere they might fill their trade, whether it's on negative Jupiter, whether it's right in front of the market. You know what they also have? They got a bunch of stops right on the top side of their trade. So the more people that say it has to go down here actually create a stronger zone above the market to say, if it doesn't go down, we're going to crash into a lot of buy orders.
Yeah, it's going to
rebound. At that point, it depends on how many short traders are still willing to go short up here. If the answer is none, if this was a perfect level to go short at, but there was nothing above it, now you've got all the long traders thinking, wow, it broke that level, I'm going to jump on this. But you've also got all the short traders stopping out. So it doesn't even require some bazillionaire dude to try and target people. It is a natural reaction of the market.
There's no orders there anymore. So it's just wide open for people just to take it up because they all got taken out.
And the only orders there are, right, the short traders who are panicking and buying out of their trades and the long traders getting in, which are both buy orders. So if it's a spot where nobody else wants to enter short, then
the other side of that too is when those buy orders are getting hit, if you're actually buying into the market, you're also setting a stop.
You're also setting a stop,
right?
Yeah. Those are not setting any stops.
Yeah.
So it takes all that sell pressure off too.
Yep. So does that help, Terry? That's auction.
Very interesting. Yeah.
Yeah, that's auction theory. So that's how auction theory works.
I like to draw that little diagram and try and color code it and just think if I sell into a trade, whoa, I don't know how it changes. If I sell into a trade, I have to buy out of a trade. And if I buy into a trade, I have to sell out of a trade. Now, early on, the thought is that people understand if everybody buys, the market wants to go up, right? So on the right side, we have our buy or our long. And on the left side, we have our sell or a short, if you will. We'll just put a little S there. So what that means is that a lot of people understand if everybody's buying into the market wants to go up. And if everybody's selling into the market, then the market might want to go down. As far as an entry point, what I don't want to say most, but what many people have no idea about is that your stop pressures are the same pressure as your entry. So this sell order getting somebody out of a buy trade, the same number of contracts has the same exact weight as a sell trader getting in. And on the other side of that coin, a buyer getting into the market has the same pressure on the market if they have the same contracts as the buy order getting the sell trader out. So like Rob's saying, it's auction theory. This market thing, I think the phrase is it's 1-to-1, basically, meaning the market does not care if you're already in a trade. You're just a buy order or a sell order on this giant thing that says, oh, you sold me, I'm going to go down a little bit. Or, oh, you bought me, I'm going to go up a little bit. It doesn't know if you're already holding a position or not, and it doesn't care. Your order is either a buy or a sell order on a bigger market.
There you go.
I don't know if that helps a little bit. Over time, that started to sink into me. And
well, I'm going to do some more. Are you saying Option theory or auction?
Auction.
Auction.
Like, hey, 35 cents, 40 cents.
Auction theory. That's how the markets operate. So, real quick little quiz. Can anybody tell me what this red candle right here, what they would call this candle? If you're inside of another, I just gave it away. Inside of another candle. Does anybody know what that's called?
Did you just say the answer, Rob?
Hey, I think I did. This is like what's called an inside day.
We need to redesign our quiz over here.
We're giving away
I don't know who gave this answer sheet.
Right.
Can I answer now?
So this is a big, this is big. If this stays inside, then we know we're going to probably chop. If this gets outside, so we end up having an outside day. Okay. Now we can probably look to see which way we're going to go, right? So right now they would call this is just a little quiz here. This is what's called an inside day. So if you ever hear that, you know why, because the candle next to us, we're inside the candle that's right to our direct left. That's all it is.
And again, to reiterate what he said, the implication is that if we stay inside of that day, the trend might not be as set, but if we broke above, the idea is that look for a very good long trend, and if we break below, look for a very good short trend.
Yep.
The idea behind inside and outside day implying that we broke out in one direction or the other, sometimes both.
So, all right, let's go to our 240, our 4-hour chart.
Awesome. I still had Pandora commercials in my ear. Sorry, I wouldn't share my sound. I had to cut her off. 240, let's see it.
Yep.
Still looking down.
Still looking down, isn't it?
As far as I can see back.
Yep. And there's nothing in here yet that's telling me the price wants to go up. We're right at this level that we're right in the middle of everything, but we're in a spot again in that inside day that we saw really kind of shows this too here, that look, if the price gets above, that gets above here, boy, we could be in for a nice run up. If it gets below here, we could be in for a nice run down. If we stay in between here, well, we're kind of chopping, aren't we? We could be chopping, so it could be tough trading. That's all we're saying, is it could be tough trading. And as we go to our smaller time frames, we'll define that chop zone a little bit more. But I would say though that we do have a little bit of room to go up. As you can see, we're down here at the bottom at this level of support on the 4-hour chart. So we do have some room to go up. But if we break that, look out below.
Yeah, so I'm looking on the bottom side, not just at the candles you show, but let's say a big down day, not unreasonable, 38.50, that's about 100 points, but there's a couple different key support levels down here that we've got drawn from a 5-minute all the way to a 240. If we break under that, there is literally nothing. So as much as I do agree, if we break under where we're at right now, a good run to 38.50, very plausible. If we broke under 3800, I'm literally looking back over a year to try and figure out what might hold. We could go back to the daily to double check it, but see, that's as low as we've ever been. Yeah. You look all the way back over years and years. So we are at a point where this is the deepest retracement we've had. Again, thinking about an index, they are meant to go up over the long run, but pretty deep pullback we've got. And like we're saying, there's nothing under where we're at right now. We have not been under this point since May of last year. And before that would be March. And
that was up only. And that was during up only. So, a lot of things going on right now, folks. So we're watching the market and watching these levels to see when the levels get broken to give us clues on where this price may want to go.
So agreed. If we break under about 3910, 3900, good shot for a down for at least 50 points. If we're under 3800, there is almost no way you could get me to trade long.
Yep.
It's kind of what I'm looking at. It's like once we break that, they might have retracements, but I'm really kind of, as long as the shorter term charts are showing me a downtrend, I don't want to fight that at all because there's no floor.
Yep. Cool.
1 hour?
1 hour.
Oh, we got 5 minutes.
5 minutes.
Let's do it. 1 hour, still seeing the same thing. Deep retracements all the way down. That triple tap on the bottom side going across. Very similar look.
Similar look. So we can kind of see here too. We're kind of in the same type of, here's our level on the level on the bottom, right? Get below that, and boy, there's our next, run down to 50. So we can start drawing our levels in on the top side. We do have some room to go up. So it would not shock me to see this go up to the 200 here. And once we get above the 200, now we've got some room to go up. but it could get choppy getting there though. That's the only thing I'm worried about is like, man, getting really chopped up trying to get there. I don't think it'll be a straight line up unless there's some cool announcement or something happens. I don't really see this being a straight line up. I see it probably
Isn't Jerome
choppy.
Powell speaking this afternoon?
He is.
12:20.
Yep. Which is a weird time.
I thought so too. And we talked earlier about the announcement, just real quick. A lot of reports and stuff you expect. If the report's at 8:30, by 8:31, you see the results of it. When the Fed chair is speaking, when Mr. Powell is speaking, it doesn't necessarily say from 12:21, we're going to see what he's saying, because he's probably being introduced and waving at a crowd, if you will. So at any point between 12:20 and 2 o'clock, we could see volatility really pick up. Just keep an eye out for it.
Yep.
All right, 15.
So now we're really starting to see our chop zone a little bit better. Maybe spread it out a little bit.
Mm-hmm.
Just kind of so we can see the current price action. There we go. All right, folks. So now you're really starting to see the chop zone here. There's our bottom, right? We get below that, and yes, let's go. Chop zone on the top. Well, I'd probably have to have your level there, that green level. That's a pretty nice one. And then,
of course, actually your level.
Oh, and then here on the top. So that would be the levels I would trade to. So I really am not interested in trading when it's going back and forth through the EMAs, because you figure by the time the price gets above this EMA, it's going to be above that green line that he has, that Travis has. What's that at about 44, somewhere 43, 44. Now the price action is going to be above the EMAs. It's above a pretty big level. Now we're ready to go long, and I would be probably trying to trade to around 39.80. Here's the gap too, so we can keep an eye on that. There's the gap. So if we get into that gap, then we can see it definitely move up. But if I'm in this area right here, I'm really concerned that I don't know what the trend is going to do. So again, if I'm trading in a range, what do? Well, I go short up here, I go long down here, off of this support, and I try to stay out of everything in the middle. It's really what it boils down to for me.
I like it.
15 is a great time frame to build your chop zone and build your levels in terms of, okay, what am I looking at, over the last 5, 6, 7 hours?
Agreed. This is one I have on the 5-minute already, but 39.1375 down to 39.12. Pretty small area, but I really like that support area. We hit it yesterday a couple times. I actually drew that same area yesterday, and then since have had a triple tap at that area this morning. So let's jump to 5.
Yep, jump to the 5.
Let's do it. So again, that area is marked on my 5. It's not on the 15, but it's about to be. The way I do that, see here it is, 39.10 to 13.75, if you will. Mm-hmm. Double click, and then just apply to all charts. Attached to, you can choose up top, all charts. Now I can apply it, and now that blue box is on all of them, which does explain, if you ever see my dailies, there's a lot of little tiny lines going across. Sometimes you might not understand where that range is from. Very often that's because I've applied that box to all of my charts from either a smaller frame, whether it's the 5, 15, 1 hour, somewhere in between. So we got a minute and a half. I marked that gap up top. We had almost right at 20 points. I can't see how far it is, but I marked from near the bottom of the candle there, 39.77 all the way down to 39.58.25. One thing to note, the daily has the same bottom of this gap, but the top is a little different due to the close of yesterday. Mm-hmm. So the top of the gap will be a little different whether you're weighing it from the 5 or to the daily. The bottom will be at the same spot. Anything you want to add?
Nope.
If you see your Bollingers on the 5, you'll see that the chop zone is kind of defined by the plus and minus 2 right now too.
Yeah, they are.
Agreed.
Oh, 100% they are. Yep.
But Randy, how often can you say that's not true? Because I really like the Bollingers to give me a general range.
It's usually true, yes.
I mean, I'm not saying like whether we're in a chop zone or not, the point I'm trying to make is that the 2 sigma Bollinger is a great extremity for the market to say, wow, it probably should go about this far in that direction, about this far the other way. And it's crazy how often, I mean, even just today, you can look back, that little green dot's my 2 sigma. Both sides tend to just ride the top and bottom of the market. When the market gets outside of the 2 sigma, it does not like being there. So very, very common place to see the market bounce back and forth between. We're closing back under. This big orange box is yesterday's 30-second range, which was also on the day before's 30-second range. So we might have 3 of them on the same spot, depending on what happens today. So I'm going to swap to my 30-second chart. We'll see what happens. Ready, set,
Go.
anything y'all want to add? Go.
30-second range. So we're going to let this 30-second range build, and then we're going to look to take a opening bell trade based off the 30-second range, not based off of anything else. Maybe mute Terry. I think it's Terry. I know we're kind of busy with the range here. So I'm going to go ahead and put mine on the bottom. I'm on the wrong opening range.
Never gave me co-host. I got it though.
Okay, sorry. Okay, there we go. So our bottom and our top is set. So on the bottom, we're at 3927.5. On the top, we're at 3934 even. So I'll type that into chat. That's our 30-second opening range. So what this opening range does is it helps us gauge kind of the sentiment and the momentum of the market. Our goal is to try and grab some of this momentum as it goes out of that 30-second range. What we don't like to do is get chopped up to where it pops out, pops back in, pops out, pops back in, or it's going back and forth through that opening range. That tells us there is no momentum in the market. And right now we're right in the middle of the opening range. So there's really nothing we can do yet. We're going to wait till this either gets above 39.34 or below 39.27.5. So let me put that in chat.
And we are right over yesterday's OV range, which was also over the day before. So just a thought, probably a pretty key level through the day is this opening range.
Yep.
Meaning if we're above it, the bias is a little long as we can stay above the EMAs. And if we're below it, the opposite. And this is a sample size. We're building this OV range trade, and it's something that all of us are kind of figuring out the details, if you will.
Yeah.
I mean, we can mark the 30-second range. Now we're trying to refine how we could trade that, like we were talking earlier, from a repeatable basis, that if I did well on the OB range today, I could do the same basic decisions tomorrow.
Yep.
So I'm in out the top.
Uh-oh. Mine, something happened on mine. Oh, well. I don't know what happened on mine. I was in, and then all of a sudden I was out. So
Yeah,
I'm not sure what
out
happened
the
on mine.
top. I'm going to reset my order.
Already hit the pay line on the top too.
Yeah. And just rescale back in off the top.
All right, now I'm in. So I did get, it's weird. I don't know what happened there. Oh,
and we're out.
So I can go to my 5-minute chart now and do this. So no momentum yet, folks. We're in at the bottom. So let's see if we can hit our first pay line at 4 points. I'm using a 2-point stop. Nope, and we're out of that.
And I'm back in.
Yeah, unfortunately, didn't get mine in time.
I barely did. I'm surprised
Yeah.
I didn't get the air. And there's the fill on the bottom side. So we're going to put a scale in if it comes back to get me.
Yeah, it went up and back down so quick, I missed it.
Yeah, it really did.
A millisecond late putting it in. I was literally right clicking to click on it. And
this trade is all about execution.
It is. This trade is all about execution, and it takes practice. And trust me, being on the mic and moderating and doing all that stuff does not make this any easier. You do need to focus. There's no doubt about it. And this could be our rundown here. And Travis, do you want to move to a 5-minute chart now? Sure. Since you got everything set up here.
You notice how it's a little bit choppy today, but not nearly as choppy as yesterday.
Yeah, no, not even close.
Yeah, this is common.
So do people remember the levels that we drew? Still haven't gotten below anything yet. We're still just kind of in the chop zone. Have not gotten outside the top, which would be 39.38. The first level at the bottom would be around where we're at now. But really, I want to see us get below 39.10. Once we get below 39.10, now I believe that we'll have a better trend developed, and we can go ahead and look for a good trade.
Agreed.
In the direction of the trend. Right on. So Mike says he learned something. You bet, bud. That's a goal here at FNL, is that we're constantly learning, constantly evolving. You know, trading is not something that stays the exact same all the time. You can have a set of rules to where you can identify a certain market type and be able to trade that market type effectively. But if you're in a market that price action that is not in your zone, so it's chopping back and forth. If you're a trend trader, which most of us are here, we trade the trend. Being able to identify when it's not trending is as important, if not more important, than identifying just trying to get into a trade.
I agree. That's definitely I guess you could say, current struggle between the two. I struggle more to stay out of the market than I would getting into it. I could find a trade anytime, but I'm close to it.
Is that trade a consistent trade you can do over and over? And when the market's not trending, I think the way our rules are set up, it's really built for trading with the trend, you know?
Right.
And you need to be able to identify when you're not trading with the trend.
I love that. And I truly do love FNL in a way, because we're not necessarily saying this is how you trade and anything else is wrong.
No.
We're saying this is what we think is the best a lot of the times. I'll share what I think works the best for me, or what I know works the best for me, but I'm not going to tell somebody else they're wrong. The underlying premise of proving to yourself without a doubt, based on a repeatable set of rules, that that's your trade, our goal is to have it where nobody could tell you you're wrong. Mm-hmm. To where you've proven to yourself over your track record and a set of rules that, like we were saying earlier, if today you had a good day and today's price action showed up tomorrow, would you have a very similar or the exact same good day? Or is there a chance that you don't even take the same trades?
Yeah.
So we did hit our second fill out the bottom. I'm in my last runner, so we'll see how far it goes.
You have to learn your personality. We all have different personalities, and you trade. One of the best personality tests that I ever saw was one that was used by my last company, and it used the sigmas. And so you find out what your personality is, and you try to never go beyond 2 sigma, because people can go outside of their personality type to 3 sigma or 4 sigma for very short periods of time, but then their emotions get the best of them and they revert back to the mean. Sound familiar?
Yeah.
And so you try to do things that don't stretch you outside of your limits, as you know, very often.
Yeah.
Yeah. And so that's, all of us we see that we have a lot of similarities. There's things you and me and Travis all do very much alike. And then there's other things that we do very much different.
And that's okay.
Exactly.
In fact, it's preferable because we're all different, you know? So we're not here to try and tell anybody how they should trade. we'll show you what we're doing and what we seem to be having some success with.
Now, the other side of that coin, it's probably easier for you as a trader to be told just this is what to do and how you do it, exactly when to do it. Go follow that guy. You won't have to think much for yourself, but you'll never be able to trade by yourself.
Yeah.
Whereas at FNL, it will take a little extra work and playback time and putting in work outside of just the hour session or 2 hours or whatever it is that you sit on session. It really does take that time where you sit down with nobody over your shoulder and make your own decisions so often that when you're on a live market, you know what your decision is. You don't start thinking, well, what did Rob say to do? What did Randy, Travis, any of our moderators, any guest, anyone? Don't start wondering what other people would do. Think, my name is Tony G, and what is Tony G going to do with this trade? Because I've seen it 1,000 times or whatever it might be. So again, our goal is for you to prove to yourself you know how to trade, and that is a longer journey than to show up somewhere and somebody hand you anything that just says this is how you trade, how you do it, follow that guy.
Yeah.
So just a thought there.
Yep.
And I'm not comparing to any group when I say that. It's just, I mean, it's how to learn to trade, I guess you'd say, without sounding like I'm speaking from a podium. Obviously, I'm not multi-bazillionaire, if you will. I don't speak from a professional background, but at the same time, we've all proven a very confident, repeatable set of rules to ourselves that are profitable, which is really exciting.
Yeah, no pressure on Travis, but we're gonna have a cool rule sheet he and I have been working on, mostly him, but we've been working on it together, and we're gonna have something out for our members here shortly. I would say hopefully by maybe next week.
Yeah.
We can have something out so people can see kind of what we're doing, and a lot of it's going to follow just what you see on his screen right now. Trade he's looking for with the trend on the same side of the 89 and 200, then that is a direction. 30 to 70% retracement, looking for a 1, 2, 3 or FNL diamond turnaround, or a double bar from a channel, an EMA, or a key level. One of the reasons why we want you folks to start looking at what key levels are, what support and resistance is because you can use those to get into a trade, to help you find a place to get into a trade. Okay. That's one of the reasons why we want you to start looking at those support and resistance blogs, the videos that Ladine and Dean did, in Trader Upgrader. Start looking at those and getting familiar with support and resistance and key levels. It will help. It will help you. No doubt about it.
It's been huge to me, the awareness difference coming from just an execution chart, like be it a 3 or a 5 minute, and then being able to expand and really check, same way we do in the OB routine, just check the daily, the 240, the hourly. Even though I'm not trading those charts, it gives a sense of perspective to what the overall market's doing. And we don't want to assume what the market's going to do, but we can definitely get an idea of common tendencies when you look at different charts. I know there was a point in time where I had on my second monitor 3 different bigger charts. I would keep either the daily or the 240, and then I'd keep a 15 minute, and then I'd look at one other chart, whatever it might be. And it really helped me to keep in perspective, like, okay, the 5 minutes showing me an uptrend, but every other big chart shows me we're in a longer term downtrend and this is a retracement and we're not even at 382. So what that tells me is to trust the 5 minute uptrend, but if it turns and starts making new lows, let go of that 5 minute uptrend as soon as I got there, as quick as I got there, if you will, because the bigger charts tell me it should go down. So when it starts going down, I know not to fight that uptrend, especially if we break back under the longer term EMAs, right? It's really easy to get caught up in a bias, especially you have a good morning going long, you're 3 for 4. It's hard if that trend turns back not to be 0 for 2 if it just crashes down through the floor when you just want it to keep going up. So,
and also right now, all the markets are operating in harmony. So we've had actually a lower low on the NASDAQ and on the Russell as well. So they've actually made lower low. They've actually dropped below their levels. So these levels that you're seeing on Travis's chart, the one that's right below us, the equivalent levels on the, let's just say the M2K, the Russell, the micro Russell, and the micro NASDAQ have broken those levels. So they're all acting in harmony, folks, which is what we like to see. Gives us confidence. Does anybody have questions on maybe the levels or what they're seeing right now in the market, what they're looking for in a trade? What's somebody looking for right now? So if you're planning a trade, what are you planning right now? I know what I'm planning. I know what I'm waiting for, but I'm hoping somebody else will tell me what they're looking for a spot to get into a trade to go short or long or whatever. Well, since nobody wants to answer, I'll go ahead and say it. We've made a lower low, so I'm looking for this price to come back up to either the opening range, which here it comes. Then I'm looking for a turnaround at the key level. So the bottom of the opening range is a key level, and I've also got 2, 3, 4 EMAs right on top of each other. I've got the 10 period, I've got the 50 period, I've got the 21 period, and the 89 period right all there.
I'm back in and hit my target. Oops, sorry, go ahead.
It didn't get me in.
Yeah, I keep it under on the retest. I always have. It just doesn't go all the way there. I don't know why. It just doesn't.
I meant to put it up.
Yeah, when it's in a good trend, it won't go all the way there. And I didn't do that. I missed it by a tick too.
Yep, I missed it by a tick. So, oh well. But so what I am looking for is a price to come back up. And so on your guys' 5-minute charts, you can all see what I'm looking at, right? That's our pullback. That's our 30 to 70% pullback, confirmation of a turnaround. Now, unfortunately, this may run away and we may not get an entry. We may not be able to get an entry. Our stop may have to be too big. So I'm looking for a red down and a diamond here for a double bar. So hopefully this will come up a little bit more, maybe all the way up to the EMAs, and then turn around at those EMAs, give me a red candle coming down, basically would be a double bar. And then I'll look to go short. Boy, Travis is quick on the trigger today, boy.
Trying. Might make up a little bit of chop this week, but it's still a sample size. I mean, it did work well today, but we're still building that sample size into the future. So it is exciting.
So you can see how it came right back up to the EMA. So on your guys' charts, look how it came right up and tapped, basically tapped the 21 period moving average, which I love. The problem I don't like is that it hit it and then dropped right back down. So if I was going to get in a trade now, where would I want to get in? Well, it's not down here. It's at the bottom of the mark. I wanted to get in this trade around 25, somewhere right around there, 26. And that's just not going to be possible.
Yeah, the problem with me a lot of times when I'm looking at setting that limit order, one of the things I ask myself is A, does my stop clear? And B, has the move already happened? In this case, we're already back at the low. So for me to get on, go ahead.
It already happened. Move already happened. You said it.
Yeah. So if I'm getting into that limit order up top, I know that now there's a chance a bunch of long traders jumped in at the low down here and are trying to run it back through the ceiling. And I don't want to jump in the way of that bus. So what that means in terms specifically to my trading, now that the move has already happened, I would want reconfirmation of a turnaround. In reality, a perfect trend, we make a new lower low here and then we retrace. But if I am absolutely still considering this level, I want to see it turn around there again. So we might have green on the way back up. I'm going to wait on another red candle again, because we've made it all the way to the bottom at this key level where we've turned around what we talked about this morning. 5 or 6 different times we've turned here. So if I'm just looking at a common tendency of the market, you could just draw an arrow up, say every time it hits here, it wants to go up, right? Well, it's hit there again, or within a few points of it, that's where it wants to go up. So I don't want to jump in the way of that and say it can't keep going up when the market showed me every time it hit this level, it wants to go up. And the last move was pretty big. So I don't want to jump in the way of that, knowing that that could happen again right here. And I can't be assuming, well, it has to turn around because 30% retrace, whatever the reason might be. It doesn't have to turn around. So now that the move's already been made, I want it to reconfirm somewhere over here that it is turning before I get into that trade.
Another thing too is that levels tend to get blown out in emotion too. So the levels, yes, while they're very applicable, when we look to our left, those aren't high emotion levels. I mean, high emotion price action. We could see this just blow through this level.
Well,
and that's why I'm saying you don't want to just sit there at the bottom and say, oh, it's got to go up from here. Oh, it's got to go up from here. because we're really dealing with opening bell emotion right now, and we could see this thing just crash through this level. So I'm not looking to trade against the trend, thinking, oh, it's got to go up from here because look what it did to the left.
Right. And the idea again, Rob, I know you're kind of saying this. The level tells me it should go up. The trend tells me we're going down. I don't want to have to choose which one of these is stronger. So if I can match up this downtrend with once we get on the bottom side of that level and come back to it, now the level tells me it should push down from there and the trend tells me we're going down. So that's where if we can break through, retest this area for a short trade, that's what I'd like to see. Because now I've got them working together instead of against each other. I don't want to ask, is the level stronger than the trend or is the trend stronger than the level? Especially right after opening bell, it's like, who knows? I'm going to wait and let them work together. Like Rob was saying, opening bell or even good trends tend to break key levels in the direction of the trend, and the trend is down. So even though there is a key level here, it's a spot that we expect resistance, not a spot you can bet on it turning around. Now, if we do get confirmation of a turnaround, that's to each their own, whether they want to trade against the trend. But that is the first time at which I would have any sort of even maybe permission to trade this. As of right now, red crashing into this level, I would not advise just assuming it has to turn there. Because as soon as we break through, you end up like we talked earlier with Terry about, if everybody assumes we have to turn here and everybody puts a buy order right here, what's going to be right under that market? All of their stops, and all of their stops are sell orders. So you might think that, okay, we're hitting resistance here, but if we break through that level, it's likely to just keep running based on people who get excited about it breaking that level, combined with all the long traders who assumed it had to turn there. And another thought there, saying that we shouldn't go long there does not mean it's not ever going to fill. It's probably close to 40, 45, maybe even 50%, but I'm aiming at 50 to 60%. So what does that mean as far as my trading? It means that I have to stay out of something that's going to happen almost half the time and tempt me every time it does. We identified this key level. It's already pushed up 5 points. Should I have been on that trade? Well, that's not quite as profitable a trade as I want to take. Now, I know that because I had to test it. That's one of the best things about FNL that I absolutely love. If somebody comes up with something that I don't necessarily agree with, I'm not going to say don't do that. I'm going to say do that until it tells you not to, and you'll be the first one to tell me not to do that. On sim, obviously, in playbacks. Go ahead.
Yeah. Or the conversely, it's a highly profitable trade for you, and you're able to identify when it happens, and it's a repeatable process. And if it is, then great. Then
right.
great.
I can't argue. You
can't
proved
argue.
that to me.
Yep. Can't argue.
Now, if you don't have any sort of track record or anything to back up anything, then it's my track record against your word. And at a certain point, there's differences there. But if you build a track record, take hundreds, if not thousands of trades based on a zone that you want to repeat, nobody can tell you that zone doesn't work, because you've proven it to yourself. And that's our big goal at FNL. It's not to say this is how to trade, but the way to trade is a way that you can reproduce tomorrow the same results you had today on the same market.
Yep. Also too, talking about taking that trade down there at the bottom going long, for me personally, when I look at all my charts and they tell me and the price is moving down, I'm only going to look for a short trade. I'm just not going to look to try to trade both ways. For me personally, it's too difficult to try and keep my head, keep my risk management strategy intact, keep my risk management profile sheet intact, all that, trying to trade in two different directions. I just want to focus on one direction until the direction changes. Then I'll go ahead and look for the other direction. Right now, there's nothing in here that tells me I should be looking for a long trade. So I'm not going to look for it. That's me personally. Other people can look for two trades in two different directions, but I'm trading live. I'm only looking for one trade. Now I might be testing trades going the other direction, going against the perceived trend, but live, I'm not looking for two trades in two different directions. Just too hard. It's too hard.
Sometimes you get caught up trying to go long, you miss your retracement off the 10 or the 21. It's like, right. That's the trade I wanted, but I was so caught up in trading against the trend that I missed the one I was looking for.
That's it.
Another thought. We talked earlier about if I was in short, I would want to fill my trade before I'm back at that resistance level, right? So the assumption here, when you see this green candle is, well, everybody's going long right there. Why am I not in there with them? Let's back up a step. If everybody sold up here, which a lot of people did, they have to fill their trade. The perfect place to scale out, we talked about earlier. Let's buy before we're back at this level. Buy, I kind of just gave away what I was trying to talk about, in that a lot of this green candle doesn't have to be long traders getting in. A lot of it is just the fills from all the people who went short earlier and are taking gains at the spot that screamed take profit before we break through there. So that green candle is expected whether we break through this level or whether the market pulls back. I would expect this to show me rejection, a little bit of green there, because that's the place that everybody wants to fill their trade. So just because you see a green candle doesn't mean that, well, everybody knew that that was the long spot and I missed it. A lot of times it's all the people who went short, knowing that that's what they wanted to do earlier, scaling out, having to buy out of their position at the key level. So again, whether it breaks through that level or not, you expect a little bit of resistance here, but that resistance doesn't necessarily mean get in long. Resistance is just that. It's, well, can the market break through there or not? And that's why I like to take a step back. And if it does, that's where, again, the trend and the key level are now working together on the bottom side. Underlying theory there, what was support often becomes resistance. So now that we've seen it 5 or 6 times as support, the safe bet or the common tendency is to say, if there is resistance after we break through, make a low and retrace. So again, we'll have a trend, we'll have a retracement, and we'll have a key level in the direction of that trend. And that gives us a place to say, that's where I want it to turn. Now my job is to wait and say, if it turns there, that's my perfect trade. So you'll see if we make it 15 points positive, my stop will pick up. We're about 13 now. I'd like to see us break through that level, and then I'll move 10 points behind. So I'll still give it a lot of breathing room, but once we're 15 points positive, I don't want to give all of that back on my runner, so I will lock in 5 at that point. Let me double check that I still have that applied. I know I did earlier.
And you can see too, once this came through the opening range on the bottom side after that first 5-minute candle, it hasn't looked back. It has not popped back through once. After that first candle came through, and then we chopped through it a little bit. The next one came down, and it has not looked back. This is a good opening range trade right now.
Very good. So out the top, we filled our first half a trade, if you will, and then stopped out. Out the bottom, never stopped out a single time, and we're able to re-enter actually on that trade. So I filled 2 contracts twice on this trade out of my 4 contracts.
Spread it out just a little bit so people can see kind of that what we're talking about in terms of the candles and how they came up to your opening range. There you go. So your opening range it's his orange box there.
It's the big one. The little one is yesterday's orange box, yesterday's opening range. So it's pretty cool. Today is on yesterday's. Yesterday's was on the day before.
There's the bottom of the opening range right there. I just drew it in red. That's the bottom of the opening range. You can see how it came back up. Once it got through here, boom, came back up, did not go back into it, came back up, got a re-entry, and now we're moving down. So really neat, really neat. So I'm still waiting for my spot. Have not seen a spot. I've tried to get in the opening range trade a couple times and missed it barely, but that's how it goes sometimes. You don't get every one you try, but so now I'm looking for exactly what Travis talked about. The trade I'm looking for is either the price to come down, pull back, give me another opportunity as the key level. Now I've got the 21 EMA I can use. That's coming down. So now I don't have to go all the way back to the opening range. Before I had to go back all the way to the opening range. Now I can look for a pullback to the 21 because that's going to keep moving down. Or I can wait for the price to come down, come back up to the key level, and look for my confirmation of a turnaround somewhere in here, and then clear my stop, clear that turnaround. So I got a plan. Just got to wait now. Got to be patient and let that plan come to fruition. And if it doesn't, if the price runs away from me, oh well. I just have to say, oh well, not my trade. I can't sacrifice my rules to get in on a trade. All right. Does anybody have questions? Thanks all the YouTube folks for checking us out. If you want to check out Futures Networks, you can go to futuresnetworks.com, send an email to info@futuresnetworks.com. We'll get you a pass. Come on in, share and collaborate with us. Any closing statements, Travis?
Thank you all for coming out. Always a good time. Our group's here to help everyone. I genuinely believe that. I know every group is, well, we care about our members, but FNL really does care about our members. So if anybody, whether you're in the room now or on YouTube and you're like, I need help trading, reach out. There'll be some